Good afternoon. This is Tom Alexander. It is Saturday, December 11th, and we're going to do our weekly market review that is based on the report that you have all received. If you haven't received the report, you would like to receive the report, you can go to the website, www.alexandertrading.com, and sign up, or you can shoot me an email at tom@alexandertrading.com, and I'll put you on the list. Okay, so what we have this week, let me show you. So what you're looking at now are charts of the 4 U.S. primary trading indices, the cash markets, the S&P, the NDX, NASDAQ 100, the Dow, and the Russell. And a week ago, I discussed the idea that we were probably on the precipice of a very sharp move, and that we were at a make or break level in terms of the price breadth work that I share with you guys. And indeed, that came to fruition, and we definitively traded higher with conviction. And that's a very important element of auction market analysis, is understanding conviction. There's only one party in the market that can create a sharp move and then sustain it, and it's the big money, whoever the big money is. It's the institutions, the hedge funds, etc. It's not you and me trading 15, 20, or even 100 lots at home. This is big money, and it involves more than just the futures market. It's also the cash market. So the message from last week is confirming what we all suspected, and that's that we're in a bull trend. We are in a remarkably bid bull trend. We are in a seasonally positive time of the year. Now, as of Friday's close, the S&P closed, excuse me, the S&P closed a new all-time high ground, followed by the NDX, which is very close. The Dow's not too far behind. The Russell is, as usual, doing its own thing. I'll get to the Russell in a minute. I want to take a look at the S&P and highlight a couple of things. Now, the green arrows you see represent every single time we have had a negative breadth reading since the March 2020 low. And I'm going to stick with this year, with 2021, but it's the same thing going back to the March 2020 low. And the bottom line is, every time we have reached negative 2,000 in breadth, we have been within a day or two, and in a couple of instances, 3 or 4, of forming critical short-term lows. None of the price lows, and the negative 2,000 represents a momentum low. Now, there are a couple of occasions in here where price and momentum have bottom ticked at the same time. There are a couple of instances in here where that has not happened. But going with the price lows, if you look at the price lows, there has not been one instance going back to 2020, March of 2020, where a subsequent decline has taken out the price pivot formed on that negative 2,000 breadth reading. So basically what you have here, quite simply, higher highs and higher lows. So that makes this pivot, this recent pivot low down here, critically important to the bull trend. If this were to come out, if all 4 of the indices were to close below the lows made in early January, it would be the first time something like that has happened in almost 2 years. And it would require an assessment if that occurs at that point in time. You can't just say, oh, it's the end of the world if those levels come out. It doesn't work that way. What you would have to do, as I said, it would require reassessment. Now, I don't think that's going to happen. And I think that really evidence from last week suggests that there's higher to go immediately in this rally before we reach anything to the downside of, we have any sort of negative downside retracement. We'll cover, well, I'll come back to the, well, while I'm here, let's just look. You can see the levels on this chart are the levels you want to, we break. If all four of the indices, and that's important, all four, well, right now, all three of the indices, the Russell is between levels, but if all three of the other indices, the S&P, the NDX, and the Dow were to break the levels you see on this chart, that would be a negative, and I'll have to reassess. And at that point in time, I'll probably come back in and do another, I'll send out a report, I'll do another video, but as long as these levels hold, I think we're as likely at this point, or actually I think we're more likely to accelerate up from here than we are to turn around on a dime. Now, the turnaround on a dime thing is in play if we take out the levels highlighted on these charts by all three of the indices, okay? So that gives you something definitive and unequivocal to lean against in terms of having a bullish assumption. And that's something you always want, whether you're bullish or bearish, you have to know what invalidates that in terms of price action, price structure. And that is our price structure at the moment, the lows that I have highlighted on this chart. So I would expect to see higher highs next week, and it could be sharply higher highs. Let's take a look at the profile view. And you're getting, all right, well, here's the Russell. Since I landed on the Russell, we'll just cover the Russell. Now, the Russell is coming off of lows, multi-month lows that are absolutely critical in here. And it's now the December auction. It's traded right in the middle of the December auction. The Russell manages, no matter how dramatic the upside is, to tease and lag and retrace and not follow the party. If, however, I'm right about higher upside next week, and in particular, if the market accelerates next week, I have a hard time believing the Russell will not participate to one degree or another. If the Russell closes above last week's highs, it could be, is likely to be short-term very bullish. If it closes below this level, it probably means that the other indices have taken out those downside levels that I highlighted on the bar charts a few minutes ago. And that would require, again, a reassessment. S&P, here's the S&P. Basically, what you have now is a distribution range in progress. So we have another auction, basically. The auction process is fractal. Fractal. It is a process that is in effect in all degrees of time all the time. And so off the lows from a little over a week ago, we're in a distribution range phase where the market is trying to find what is value above this level. It has been accepting, and it accepted last week, higher and higher and higher prices that it made off of this low. You're going to get a similar view with, of course, the Dow. Here's the Dow, and then the NDX. And by the way, I put in the report, this is the time where you will have everyone that is immersed in Elliott wave and Fibonacci coming out of the woodwork, calling for the Grand Armageddon supercycle top, the latest and greatest version. And some of them will eventually be right. You can't be wrong with Elliott wave, and you can't be wrong with Fibonacci. With Elliott wave, it's just an alternate count, and with Fibonacci, there's always another number not too far above or below the number that you just blew through. So let's take a look at technical situation. Okay, now my entry into the magic number sweepstakes for an upside potential target is around 4,800. And where did I pull that magic number from? Well, it's precedent. It's the precedent of what has happened every time breadth has reached a negative 2,000 reading and prices bottomed. Once prices bottomed, following that reading, the minimum upside has been about 6.86%. As a matter of fact, it was back here almost a year ago. we had a 6 point, I think this is about, it's about 6.88%. Now there have been, this is the least highest percentage. We've had others that have gone 14% or so, et cetera. So my entry into the magic number sweepstakes is something around 4,800 or higher. If we get to 4,800, we can fine tune that. But right now you don't need to guess. As long as last week's lows hold, last Thursday's low in this case, I think that's the case across the board, the market's going to go higher. When we close the new all-time high ground, we shall see. Breadth is also friendly to the idea that we have further to go. The typical pattern in breadth following a negative 2000 breadth reading and then a price low and a subsequent launch. We had the launch. This is the momentum peak so far back on the 7th. I'd be surprised if we get above this, but what I would be looking for now is a series of higher highs in price and lower highs in breadth. This can go on. This could go on into January. So that's what, you would have this in breadth and you would have this in price kind of thing. And again, if we do manage to trade up into that 4,800 level, we can visit the situation at that point in time and sort of fine tune this, and we'll certainly be able to fine tune levels. So guys, have a wonderful week, and please subscribe to my channel if you have not. And if you found value in this, please like it. You guys have a wonderful weekend.